All right, guys, we are back. I hope you're having a wonderful Friday night. Hopefully, you guys stay inside and be safe and productive. Or actually, some of you guys need to go outside and enjoy yourself. I know this was a interesting week, but all around exciting for the Colts. So, as you guys see here, this is the new style of videos. You guys didn't tell me. Is this more helpful to have notes in kind of like a summary out here while I'm talking mixed in? We're going to go over the screens. I'm going to show you some plays. This is a really important thing. I want to talk about how I'm going to make a lot of money. Literally, I'll make a couple 100,000, hopefully more if the market crashes. And I'm setting up that play right now. And I want to talk about that. If you guys watched my videos the last month, I need to talk about that. The people who played the puts, the people who've blown up accounts. There's so much to talk about, right? But we'll do that. This is one of the first things I want you to see. I talked about this today on stream. Last time I did this before. I turned $2,000 into $250,000. Comment below if you saw that live. I know people are going to be quick to say, no, you didn't. You don't say you're big. I did it in front of 100 people live. Here's an example. I literally have the recording. You can see 13,000 realized, up another 78,000, literally. And look, it's the SPY puts I'm going to talk about. But you could find this video. It's up. Just search this. I say it. But I'm going to show you guys this, and I want to talk about some things, and I want to talk about some of the data right now, where the market is, and yeah, we're going to go from there. So hopefully you guys are ready. If you are new, make sure that you subscribe to the channel, and don't forget we are live streaming every day. We had such an awesome live stream today. Go back. There were so many good lessons. If you guys could tag that for the new guys, I'm telling you, this was one of the best live streams. We had some awesome plays, great lessons. We were talking about selling premium. This account is gone. It's been like 7,000 in the last week or two. The premium's been doing good. I want to talk about that. So make sure you guys do not miss that. Now let's talk about making money off the stock market crash with options. So I already told you guys, search Trading Fraternity 90,000. You could see the video, but this was back in August 15 that I did this. So I'm going to talk about the reasoning and whatnot, but really, the situation was similar to today with a lot of the global economics. This was the first time China devalued. That's what set me off. You guys know me and my global macro stuff. Imagine in 2015 in August, nobody was talking about China. I promise you. They were talking oil, and that was about it. And they weren't even talking Amazon. They were barely talking Amazon, right? And that's why I bought my shares at 300 or 400 or 450 or something. I got them at 314. Think about this. It wasn't huge. This is where China first came on the scene as, oh shit, they're messing things up. So that's what happened, and I was able to play it. I used the macro, and it turned into a flash crash. And now the thing people mess up on, I want to talk about this. The number one thing, if you guys want to make money playing puts on a downturn, and this is why I'm going to show you some of the puts, and I'm going to talk about what doesn't work, because you guys, it seems like, a lot of people just simplify options, and this is what I talked about on stream today, where it's not just up or down, you make money. You guys, you could buy the same exact play as me, but if you buy it at the wrong time, you'll lose money. So it goes well beyond that. We need to say what not to do, and what not to do is you're not just going to buy a put. Okay, so if you're like, hey Josh, the yield curve or this, I could give you every reason. If you're like, okay, simple as that. Let's just go out here to I don't know, 2020, 19, any of these. If you're just like, I'm just gonna buy this, we'll buy a put here and hold it. It's not gonna work like that. Why? Because you take a look. Let's go to the 2020s, right? And here's the SPY. Let's just click one of these, right? Like the 254. You could see what happened. It's not like these guys. Yeah, you could have bought this, like if you were waiting for the crash, right? Let's say in April, you're like, yeah, when I posted a video, April, I was like, the market's going to go down, or I said the market's get ready for it. I wasn't as, oh, whoa. If you're like, okay, I'm going to buy it. You bought it at $2,000 come October, even after the big thing, you're like, oh, it barely goes up. Okay, it shoots back up to 14 by the Christmas Eve. You're break even now. You're barely up. At the end of that, you would have made $900 off your $2,000, while you would have been down 50% for 5 months before that happened, and now you're still down if you didn't capitalize. It's not going to work like that. So you guys have to be careful of that, right? You're not just going to buy it and you're going to make money. It just doesn't work like that. I'm sorry. It's going to require more timing like that. And then the next thing, do not buy. Oh wait, no. Let me finish on this point. Is related to number 2, but you need to somewhat time it. And let me talk about the market timing fallacy, and that is a real study. But essentially, don't respect the markets, okay? If you think it's as easy as, okay, the market's going to crash, I'll just buy puts. I think everybody would be rich, you guys. You see what I'm saying? The market is not that easy. They're not going to make it that easy where you just, oh, I watched a YouTube video and I got this idea about, yeah, so it doesn't work like that. So this is what you guys, if you want to take your trading to the next level, you want to literally, I said it today, you just got to find one person dumber than you on the stock market to buy the stupid contract you just bought. So don't be the stupider one. And it starts here, buy the guy who buys it here. And that's what I'm saying. You need somewhat timing. You could be the guy who buys it here or here. I said here because then you'd still be break even, right? That's a good point. Even then, even if you're not winning, you'd still be in the game. No money lost. You would have lost for a little bit, but again, that would have been a little better of timing. So you see what I'm getting at with this. And actually, maybe I might find some of these that we could probably pick up if some of them are cheaper. Like I'm sure as we go down the money, some of these are going to be hitting those lows. And, there you go. It's back to that August 10th, August 11th point. But the next thing, the market timing fallacy. This is a real study. You guys could look it up. But it's pretty much this thought that if you do try to time the market. So if you are saying, okay, I'll wait, I'll sell out of everything and I'll buy the puts right there. Or I'll buy my calls and I'll sell my stock at the top and buy back in right before it rips. They did a study that it's so hard to time the market like that. You usually end up losing more money because if you miss the bulk of the move, so if like you're not in the put and then you try to get it the day after it rips and you miss a 1,000-point day, you've already missed the bulk of it. Or if the market bounces at 800 points and you're not invested and you already sold out, you're going to miss that rally. In the rest of the rally, you're going to get less of the gains. A majority of the gains happen in those few day moves. So you got to make sure, timing can be really costly. So that's why scaling in and everything we talk about is so important. So the next thing I want to talk about now is index puts are not for small accounts. So these are good and what I mean by index puts, SPY, IWM, UVXY is one of them, Dow Jones, any NASDAQ, QQQ, SQQQ, any of the ETFs and indexes are not good to play. People, I know. Don't get mad at me. You guys are gonna get pissed. You guys are gonna get pissed at me for that, and then wait till I show you the plays that I'm gonna play. Oh man, the Wall Street guys are gonna flip the fuck out. They're gonna be like, "No, you can't do that. That's stupid." It's like, okay, just short what the fuck I'm doing then. Okay, put your money where your mouth is. That's all. Simple as that. I show you, you short me. Very simple, my friend. Very simple. Don't let the people do what they want to do. Be safe. Very, very risky. Okay, you got to be very, very smart in this industry. But seriously, everything here too. I have the disclaimer in all the descriptions, but understand options are risky, and this is why I'm showing you guys. It's a finesse. If you're not in the game like EA, you're in trouble. But index puts are not good. They are not good for small accounts, and in general, they have less risk reward. This is what I was saying. If index puts provided a good risk reward in return, everybody would do them, and it would be a lot easier to short the markets. But they're only good in cases of extreme volatility, and only reason why small accounts like them that are small, because they're like, okay, well, I could go like March 19, you could still get 20-cent options, 40, and these could go up, but you have to understand how much are they going to go up, right? Like let's take an example. You could have bought these, $200. They went, but again, you guys are saying, some of you want to buy one for 40 cents. So look at, oh man, that looks so ugly. Jeez, why is it so bad? Oh, that's a new option. That's why. Yeah, there you go. See, I could tell it has limited history. So here's another lesson. If it has limited history, it's because it's a 231. They added that option chain to make more money. The solid number will be the one with their, that existed for a long time. But here's October, right? So, but even then, these were all expensive. We got to go cheaper because you guys are looking for these $10, $50 puts. And this is what I'm trying to show you is that you'd have bought it for $40. You would have made $200, which is not bad, but you're buying one that's just not, you can make more money than that is what I'm saying. $40 to $200 on that SPY put would have been great, but now this is what I'm trying to tell you. Instead, it's a bad risk reward. If you think something's going to go down, even on earnings, play the company or the related big industry or company itself and go for an individual name, because at the same time, your $50 to $200 could have been $50 to $5,000 playing Amazon put or playing something related. Again, overall market crash, and you guys have theses and ideas. You play it through there, but hopefully you guys get the point of what I'm saying. It's go for the index, because this is what I'm trying to. This is the main point. This is just fact. Indexes are weighted. if you are, if you guys are right, you're like, okay, a lot of people say I'm going to play index short because earnings. So I'll play QQQ if Amazon fucks up, or you guys are like, oh, I think the market's going to go down. Let me buy SPY puts. The whole point is an index is supposed to not reflect one individual move. So if Amazon moves 15%, the QQQ is designed to not move 15%. So you're only going to, everything needs to go wrong, everything, for you to be profitable on. That's why I say go for the biggest companies or go for the weakest links. And I'm going to show you guys when I show you one of my plays, but I'm going to show you index plays. So again, the examples I played index plays because I have a bigger account. I could buy, why do you think when you hear me buy puts, I buy hundreds of them? Because you need hundreds of them. And it's how they had hundreds puts at 100% is going to give you a different result than the Amazons. You can't do 100 Amazons because Amazon has my gigantic spread. I was about to say some messed up shit, but it's because it's that messed up. So understand that, but go for the companies itself. So let me tell you guys. Now let's talk about what I'm going to play. This is how I'm going to make the money. The 3 plays I made today, the main one, this caught my attention because it reminded me today of the flash crash. So look at these. SPY 8 September, October, and this was, look at the date. I bought them October 17th. I bought a month out. October 20th and 18th. I bought 2 months out. August, September, October. But look how far it was. The SPY was at 215 at these times. So this was very, 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 very low. But look at the quantity, 200, 100, 100. And look, I bought them for, imagine that, 100 puts, 3 cents to $1. 2 cents to 157, and I had 200 of those. So I literally made 22 grand on that and more. So think about that. But this is the type of play I'm going for, where it reminded me of it because I was like, whoa, there's 30 to 60 days and the percentage isn't too far out the money because they've depreciated. So I'm going to show you my IWMs. These are the ones, this is one set I bought, but now again, I could be wrong, whereas I'm scaling in. So I'm hoping the market goes up more because as the days go by, this is what I'm stalking. As long as, once my macro data matches, and if it doesn't, I'm going to make up for it by selling. I'm going to talk about in another video, the ghetto spreads. If you're not familiar, you have to watch the stream. It's a very, very crazy strategy invented by some crazy people on Wall Street. It's literally called the ghetto spread. It's insane. Insane. If you don't know about it, you know. If you know, you know. But we'll talk about that in another video. But that's, I have plans, both sides. And that's my last tip I'm going to give you guys, is to be adaptable. But these are the ones I got. I don't know which ones I got, actually. I think it was the 110s on, where it is, March 110s. So I got these. So this is crazy, right? Oh, I could have got these. So look at, you guys can get the 111s because I got these for 6 cents. And now look how difficult this is. This is why these options are so dumb and stupid. And that's what I'm saying. This is where the Wall Street guys are going to flip. This is why for a small account, you guys shouldn't buy this. And that's what I'm saying. Even if you have $1,000 in your account, this isn't the play for you. Because to put half of your account into 100 of these, they have awful spreads, they have awful deltas, and huge theta. It's literally set up to fail, okay? These are what you would sell premium on. So I'm telling you, this is a fluke. I'm trying to find a fluke. So I'm betting on that where, I could take that bet and I'm trying to do something with it, but I have another alternative to sell premium. So please be aware of that. But what I'm saying is if you have a couple grand, if you don't have a lot of money to play this is for the bigger guys, but I'm using, you guys are like, well, what's the point of this, Josh? Go find a small company. Okay, I'm going to finish the reason here, but find us a company to play this on, or find a way. We could talk about setting this up for a small account, but this isn't going to be your bread and butter. This isn't going to be the one play you hit. And I know a lot of you are thinking like, oh, I just got to hit one. This one isn't it. This is a good learning experience, and it could lead to a good potential play, but this isn't your game over play or your life changer. But it was those IWMs, and I like them because they have time. They have about a month in. About 45 days on them. And now look, a 111. Let's see how far that is, because look where the IWM is. 111 to, or 110 to 149. That's what? 39, I think. 149, 18 minus what? 110? 39 divided by 149.18. That's only 26%. And you guys are like, that's a big move. I'm saying the IWM is going to drop 26%. However, from the low, that's only about 15%. So if we retest lows and then go below, but then again, it has to do that in a short time frame. So I'm going to hopefully, just like this video, you guys see, if I could go, I'm going to go try to get further out and further out and further out. And we want to see, but I start looking, and this is why I had to pay more. I bought those the 17th. They were at 2 cents. And then look at the next day. If I wanted more, they went up in value a lot. So pay attention to that. But in general, that it's not that crazy of a move for the price. At 6 cents a pop, I am paying a little more than I would like, but I like the decent amount of time. But again, this is just a $600. This is equivalent to me playing Amazon, a $600 Amazon YOLO. But instead of me putting it on a weekly, I'm putting it on a fucking March. So it's going to give me that time. But as you see, these did the same thing at one point. They went from 12 cents or 20 cents to $2. So lightning might not, the chances of lightning striking twice is very slim, but I'm trying to find that winner, you know, and it's going to take time and it's going to take precision. So that's what we're doing here. So hopefully you guys can learn from this, and I want you guys to use this to try to be hunting for it. But now let's really talk. What is the main point now? So the big warning I need to give you guys is, well, one, and then I did UVXYs and I sold calls on the market. If you guys saw, I sold calls and then I got UVXY. Ignore the UVXYs because you guys are going to get too trigger happy. Honestly, the same reasoning with indexes and IWM. It applies. Everything I said about IWM applies to UVXY. And then I sold calls because now this is what I want you to see. Where the market is at, it reminds me of 2015. We're up. So it's like doing this thing where we should be higher. Maybe we test 287, but that's what the market did in 2015. It had volatility, and then it came back up. It clipped. It had this crazy weird run up, and then it died. But the whole fact, that's one thing. I'm not saying, okay, technical this, but what I'm saying about where the market is at, what I'm saying with this tip right here, I'm saying, but just as more important is where the market is currently in both events and just position. It hit a low, and then for the last 30 days, time premium evaporated, and underlying assets ripped more than they have in 30 years. It's an opportunity for puts. But you got to let it time. Don't let the market fool you. If you get baited in too early, that's what happened to us here. We didn't get baited in too early. We kept getting baited in lower and lower, and you got burned. And that's what I want to talk about. My final warning, you guys, it might not look how you expect. If the market is going to come down, even if it does, we didn't expect this. We loved it. We made money on the downside, but we didn't expect it to look like this. You don't know how it's going to look, and get expectations out of your head. The market could move slower than you think. This is the best example. From December 24th to here, you guys don't know what it's going to look like. It's still, the data's bad in this, but you guys are like, whoa. This isn't how a market crash looks like. Talk to me in 6 months. Talk to me in a year. You guys see what I'm saying? It's the development. It's my best example is, have you guys ever seen a cargo ship crash? There's one on YouTube. If you look like cargo ship crashes into school, it's the funniest thing, because a big ship, to turn around or crash, like, they can't U-turn. It's this comedy, because you see this big thing moving so slow, and it's crashing, and you can't turn it around. So it's similar points here, but be reactive, because again, the market, the news, the Federal Reserve, you guys gotta understand there's trillions of dollars at stake here, okay? Let's be real here. Trillions of dollars. You know, businesses, political, reputations. There's more than your little fucking $4,000 account, your $400 Robinhood, my $400,000, my $4 million. Nothing. Nobody gives a shit. There's so you guys got to understand the competing factors here, and you know, nobody wants the market to crash, okay? So you got to be smart and know how to play that and recognize the opportunities and adapt, okay? That's it. And don't quit, you guys. You know what I'm saying? A lot of you got discouraged from you getting burned. You didn't respect the market if you got burned. You kept buying. You thought it was going to really be that easy. Come on. You know what I'm saying? In retrospect, it's easy to see because the money's not in your account now, but don't get caught up being that foolish where you thought, oh, it's going to be that. Yeah, I'm going to make all this money. I just clicked this YouTube video. I saw this. I bought a put. I held it. Yeah, boom. You know what I'm saying? Oh, yeah, look at all this day. Anybody can do that. It's not going to be that easy. You know, not everybody's watching this whole video. Not everybody's spending their weekend looking at puts. Not everybody is combed through option chains like I have. Put in the work and you'll get it. But don't quit, because now you see this 30 days of BS and cucking. It's creating a huge window of opportunity. So if you're not complacent, time is getting ready to strike. So I hope you guys are ready. So don't make the same mistake of not adapting, my friends. I'll leave it there. Subscribe and like the videos. Support the cult. so the Colts can support you. Feed what feeds you. Curse the trees that do not give back to the earth that feeds them. Okay, I'll leave it there. That was I love you guys. Like it if this helped out. Make sure you guys come to the stream. Subscribe with the post notifications to not miss the stream and all the other videos. I don't know. We're getting the cult is growing. I love you guys. If you want to do a weekend stream, I don't know. Let me know who's active with it. I want it to be popping. You guys, I need that energy. You guys feed me. I feed you. Get it popping. We'll do it. But get ready for Monday. It's gonna be fun. Good luck for anybody betting on the Super Bowl. Use risk management as well. Go Rams. Whoa. All right. Bye.